Well, 46% of Americans say that their personal financial situation is poor. That's from a new AP poll with Nork Center for Public Affairs Research. So we're happy to have Mike Giordano, financial advisor with Williams Wealth Management, to help anyone who might feel that they're in that group. First, then, Mike, let's start. Tomorrow, we're going to find out more about inflation and get that read when the Consumer Price Index is released. Do you expect good numbers, or are we still looking at high inflation?
More of the same, Jane. Yeah. It feels like it's going to be more of the same, still sticky, still over 8% on the headline number. But you know what? You have to always watch out because nothing works in a linear fashion. You know, the markets don't work in a linear fashion, and inflation doesn't either. This stuff can stay sticky for a while, then bam, you can have a big reversal. And that happened in the 80s. They were putting a ton of pressure. The Federal Reserve kept hiking rates. Nothing was happening. Middle of summer of 82, bam, went way down, about 50% in about 3 or 4 months. And so that's kind of the same thing that can happen here. So don't get too gloomy. You know, situations can change. It's just, you know, I don't know. I'm not saying it's going to happen tomorrow or next month, but be on the lookout.
Yeah, and I like that you looked back at history, because sometimes there is a certain level of comfort in those sort of situations. So much volatility, though, in the stock market seems to be investors watching the Federal Reserve to see if they're going to increase interest rates or not. But the economy seems to be contradictory. The Fed is looking at the employment numbers. The employment numbers are good, so the Fed says, oh, that's bad, we're going to raise interest rates.
Yeah, so what's in investing is contradictory, right?
Yeah.
When it feels good to invest is usually the bad times, and vice versa. Yeah, in this case, the unfortunate thing is a tight labor market is creating a lot of wage pressures that keep going higher and higher and higher. More wages is good, but unfortunately that exacerbates inflation. And so what the Federal Reserve is trying to say is, for the long-term good of the economy, we need price stability, so everybody knows how much things are going to cost. Where you got to deal with a little temporary pain on the job side to get there. But at the end of the day, you also want real wages. And even though people's wages are rising maybe by 5%, it's not countering this 8% inflation
rate.
So, yeah, so they really want to loosen up the labor market a little bit, not have such high wage increases.
So I didn't like that 46% of the people feel like they're in a poor financial situation. Love to be able to turn to you. With the markets already off 20 to 30%, is it too late for people to make adjustments in their personal finances, Mike?
It depends on whether you got short-term or long-term goals. If you have short-term goals, you're sending a child to college, or you're looking for a down payment on a home, or maybe you want to retire next year, you need to have 2 or 3 years worth of cash. So if you don't have that right now, it's not too late to make those kinds of adjustments. If you're thinking more longer term, I don't need this money for 5 years or more, then these are great times to put money to work. I mean, the unfortunate thing is people want to put money to work at all-time highs, and then when the market's down and you've got these quality assets at low prices, people are like, I'm too scared to invest. So it is contradictory. The times that feel the worst to invest are sometimes the best. So I'm not saying you plow all your money into the markets right here, but you've got better pricing than you had at the beginning of the year. And if you work things in over time, investing's a process, you work things in over time, these investments should generate better returns for you than the investments you made 8-9 months ago.
Excellent. Mike Giordano, it's always good to visit with you.
Love it, Jane.
And we'll see what those consumer price index numbers look like tomorrow.
8:30 tomorrow.
Thank you so much.